All right, good. All right, so we are here with John Seagrave of
You're smiling already.
of Barron Financial, and honestly, John, you're a close, and I would even say as a friend,
Yep.
you are our financial advisor along as with the companies. So I'm excited to talk to you about stuff that that is actually kind of a theme of the podcast, is kind of really educating people on home ownership and all of the things that go involved in it.
Yep.
And I'm going to get to that question in a minute, but I want to just give you a kind of a quick chance to a little bit about your background, where you're coming from, and honestly, I'm gotten ahead of myself here, and congratulate you on last year. I think was a big year for you.
Yeah.
And a big success with is obviously a lot of hard work beforehand to get to success. But I think so maybe explain what
Yeah. So appreciate that, and obviously it's been nothing but a pleasure working with you and Sarah and Fine Home. So that's been great. But yeah, so very excited that Barron Financial Group, our firm, has had a pretty good run over the last several years. To your point, last year was pretty big for us, just in the sense of not only growth, but adding, not only growth of clients and assets, it was, adding a new employee. It was opening up a second location in Burlington, which I'm very excited about. And on the personal side of things and on the business side of things, we got a small little award last year too, Hartford Business Journal's 40 Under 40, which I was very excited about too. So, above and beyond that, because I know you're a community guy, I'll also share, I helped start a nonprofit that's in our second year now too, Stock the Shelves, focused on working with a lot of the local food pantries. So as someone I know that's very big on the community, to have that kind of grow and help people during tough times right now was big. So yeah, it's been busy. Things have been great. And on the advisory side, we've been attracting new clients, retaining existing ones. And as I shared with Sarah earlier, it's onwards and upwards for 2024.
Yeah. And not surprising, John. I mean, you're a good dude. You're out there, and people can feel that. I mean, that's how how we've known each other for a while. And, just a little bit of a plug, because I wanted to state this, because I'm actually thankful about, if people are kind of hesitant about a financial advisor, because you're like, oh, I'll just, whatever.
It seems stuffy when you talk about it.
Yeah. Or I don't need it. I'll just put some money away. There's a lot more to that, but it's also, you're like, hey, Dave, we need to sit down. It's the end of the year. Let's adjust some stuff. And
right.
There's like a little bit of, you look across, well, how much do you want to save each month? And it's a little bit of pressure that I feel, which is good, because when we originally had that conversation, you were like, maybe you should do a little bit more. And I'm like, listen, I know, let me keep my own money, and I'll do, I'm into real estate. I know what to do. The reality is, though, is that there was a little bit of guilt. There's a little pressure.
Sure.
And we put a little bit more money in because you were standing there.
Yeah.
And at the end of the day, we have a lot more money in the accounts now.
There's the reason for us, the reason we exist is because you full well know, as a small business owner, you can't wear every single hat. I mean, even though you have to, somebody else has to sort of be wearing the hat too. And I think to that point, you want someone that's going to be in the background watching something and calling you to say, Dave, we should be talking about this. Now's the time. This is on my calendar. I had the reminder. This should be something you're focused on.
Right.
Dave, you're having a good year? Great. Here's your options.
Right.
It's hard for you to think about that on your own. Right. And why would you? You're not the expert in that area. You're the expert in what you do. Right. So that's why you have the team behind you.
And it forces, as a business owner, you're thinking about, well, okay, let me buy more assets to kind of like grow it more. But the reality is that someone like yourself is saying, hey, pull some of that money out. Yeah. Get that somewhere diversified somewhere else, because you have some bad years in the business. Now at least you've socked away some stuff.
There's no doubt that treating your assets as a pool, and that you can pick up a portion of it, move it somewhere else, and have a different pool somewhere else is absolutely an okay thing to do. Just because you only know real estate doesn't mean you have to just do real estate. Right. You can not just, diversify is the word everybody uses, but the truth is, you're just expanding your horizons in a lot of ways. You're giving yourself more opportunity. The market's not always up, as you well know. Yeah. Just same thing like real estate, same thing with, the flow of clients in the construction side of things. It's dependent. Everything changes, but to have the partner, to have a strategy and a plan is really what's most important for people.
And you just queued that up perfectly for my question. So
What's the question?
about the moving of the assets, and part of our podcast is about really education of what the true cost of home ownership is,
Yeah.
and does it make sense? And I think most people, American culture is, your home is your biggest asset. You get your mortgage paid off, and
Yep.
now you have something.
Yep.
But the reality is it's just a forced savings account.
Yep.
And you might not be getting as good of a return because people, my house is worth $900,000. Well, you just spent $900,000
Yeah.
on interest,
Yeah.
paying off the 30-year mortgage, plus you've done all the capital improvements.
Right.
Right.
It's situation driven, I think, entirely. But you're absolutely right that I guess me personally, and a lot with my clients, we're not looking at like a primary residence necessarily as a cash grab opportunity here. This is not, as much as you want to buy your primary residence and ultimately sell it for more money, which almost everybody does in those situations if you hold it for long enough. Most of the people are looking at whatever their long-term wealth is going to be whatever they're socking away for retirement purposes. Because you don't want to feel like you're forced to all of a sudden sell a primary residence.
Right.
Sarah and I got into a conversation about rental properties, and it became a discussion about, first of all, you have to have the assets and the ability, the equity to do it. And then in that situation, you have to manage it, you have to take care of it, and then yes, you're going to have an income stream over time, but then what's your return on that too? How long are you going to be doing it for? So I think that there's something to be said for real estate as part of the portfolio, but to your point, I just don't think it can be everything.
Right.
And I think that's where, whether it's, retirement planning, retirement planning for the future and investments related to that, or just some sort of different strategy associated with general savings, all of that can be featured along with you having assets that you own.
So do you think though, is if somebody's disciplined, and said, you know what, I don't want home ownership, but I want to rent, I almost feel if you really calculate it down and said, okay, instead of, I'm going to have X amount of dollars freed up each month, and I'm going to invest it.
Yep.
So, I mean, would you agree? Like, don't you, at the end of the 30 years, you might have the same amount, if not more.
Renting is a situation that I think is dictated based on your own situation. Right. So I would agree with you that I've always kind of been a proponent of the owning side of things too, as I know you are for a good portion of things. So I think that there's something to be said for having that ability to kind of sock something away systematically. And I mean, you said it right at the start of the podcast that pressure you, get you to do something, and it's kind of out of sight, out of mind for a period of time. Don't get me wrong. The rental properties can be a great way to go. It could be a great opportunity for you if you have the know-how. And that's what I was sharing before. People that my experience is the clients that get into the real estate side of things are those that just have a general familiarity. They've been contractors. They've been in trades. They're people with that additional cash, and this is something they were a part of previously. Get into what you know or what you're comfortable with.
Yeah, I mean, the rental properties is just another job.
Yeah.
And we're being compensated for the job, but we're still performing.
And it keeps you busy.
We're performing the
Absolutely.
job still.
Yep.
It's not,
it's not set it and forget it.
Yeah.
It's not.
Yeah, it's, people think, oh, it's passive income. It's No, it's active.
It's
active
work.
Yeah.
Absolutely.
Yeah, so interesting. I think what overall, I mean, I think real estate returns, if you're doing well, right now it's appreciated through the roof, but over the long term, it is only between 4 and 6%.
Right.
So what is the market usually return over 20, 30 years?
Yeah, it's significantly higher than that if you look at what like the S&P has done. I mean, even I was actually having this conversation with a client earlier today where we were talking about just what the general economy has kind of done even since COVID, because Sarah and I were talking about that too. From January 1st of 2020 to today, basically, the U.S., the S&P 500, which is more or less the broadest measure of what the U.S. economy has kind of done, is up 46% over that period of time. And granted, that's during COVID. March, it's actually kind of funny. I go back to mid-March. I'm a CFP, a certified financial planner. Many years of work to do that, a lot of education, and then an 8-hour exam. And I remember an 8-hour exam, getting out of there, passing it, fist pumping, out the door, and I turn my phone on, and I have all these emails, all these missed phone calls, all these voicemails. and I look at the market and it's down, 15% that day. Hit the limiter twice on it. So I had 2 minutes to actually be excited about what had just happened before that happened. But we watched the market drop, 20, 30% in March of 2020. And by it just started going up. It went all the way up until June of 2021. Right. So yeah, there's markets move around, but there's a lot of opportunity associated with it. And, again, whether it's real estate or whether you're in the market, it's a comfort thing about how much exposure you should have. And I'll be the first to say this. Our clients didn't get 46% return over that period of time because none of our clients are fully in the market unless they actually want to be. But most have taken a level of risk, and they experienced a good portion of that.
The reality is that there's a good opportunity to make more than 4 to 6% that you're getting in the appreciation in real estate.
Yep. Not to mention there's tax benefits associated with things if you put them into qualified plans or IRAs. If it's non-qualified and you're putting money away getting that, then all of a sudden you have a liquid asset and you can touch it. Granted, yes, you can have a home and you can do a home equity loan or a line of credit tied to it too, but now you're kind of playing with what I'll call house money in that way.
Yeah.
So
yeah. There's a lot to it. I think for the lay person that doesn't even know, as a small business owner and kind of just on this crazy journey of life, you do really realize how much you don't know, and you don't even know about this stuff. And I think what would be maybe one of those key things that you realize the average public does not know that you do?
So that's actually a fantastic question. And I've thought about this a lot because I know for a fact in the future, somewhere down the line, I'm going to teach. I would love
to be good at it.
I somewhere in the future, I'd love the opportunity to be a part of a community college or a first year experience class at a college. And I literally want to teach a course called Crap You Need to Know and keep it simple because I don't feel like it's stuck with me. Any of that personal finance type of stuff. I don't feel like anyone really kind of sat me down and explained, look, you're not going to need a mortgage today, but you're going to, and here's the real basics of it. Here's what it looks like to actually save for retirement. Here's how the tax system works. I mean, those basic things you kind of stumble across and figure out on your own. And I think that's crazy how that operates. But, for me, I would say the biggest piece of advice I tell people is start early. And that's ironic because the majority of people I work with are in their 60s. They come to me and they're basically saying, how do I manage this going forward? And the truth is a lot of them have saved and done pretty well for themselves. But those same 60-year-olds also ask me to meet with their kids or their grandkids. And I'm more than happy to do that. Take the time, there's no fee for something like that. It's just sit down and just talk and give them some thoughts. And because of it, I know some of my clients' kids and grandkids that have started saving at 24, 25, putting, $300 away a month into a Roth IRA and letting that thing compound over time. They are setting themselves up and they don't even know it yet. And I think that's what I would tell people is that you're on your journey, do the best you can with what you got right now. But if you've got kids, grandkids, something else like that, really thinking about educating them now because you're only setting them up that way.
Yeah. I mean, you look into those, little figures about the laws of compounding. And it's bananas. You'd rather take 2 pennies a day for the rest versus $1 million.
Exactly.
And the 2 pennies are worth within a month way more.
It's absolutely astounding what someone can make over a period of time. Now, again, it can hurt. You're not dining out that one day a week or whatever it might be. It's an adjustment you have to make, but it means that in the future you're going to be in a better place. Yeah. And I think, I was telling Sarah again, I think you and her have a really good head on your shoulders for the way you guys do things because it's a balance of, hey, we like to take trips. Hey, we like to do things. But at the same time, we're making sure we're okay here in the future. And I think more people need to kind of emulate that, especially small business owners, because a lot of times it's easy to just keep buying equipment and buying things and taking on more than you can handle. But you guys have this down now, which I'm happy about.
Yeah. Well, I mean, we're figuring it out as we go.
But that's what everyone does.
Yeah.
Right?
Yeah. Yeah. So, I mean, interesting stuff. I want to stay true to the time. That went very quick. We're almost there. What, anything else you want to tell everybody about?
Well, I plugged you.
Yeah.
When Sarah's segment, and I'll do it again here if that's okay. Obviously I'm a very not only am I working with you guys on the personal side and the business on a couple of things, but I'm very proud to say that you guys did the kitchen for us too. It's a space we absolutely love, and I think I say this all the time. For the audience, you guys are a great operation. You guys know your stuff. You guys know what you guys are doing. And I think for a lot of people, the last couple of years have been interesting. And I'm almost kind of curious because I don't think you and I have had this conversation. We watched material prices go bananas, to your point, a number of times over a number of years. Where are things now from your side of things? Not just materials, but I guess also the labor side of things.
Well, you're right. We do have an intimate relationship, so you do know that we took a bath with material pricing going up.
I think
so
everybody
much.
did.
Yeah, like
yeah.
we basically just continued to just get the jobs done and look at the cost of what court would have been if we walked away.
Yep.
Because as a business sense, we should have walked away from about 80% of the projects we had going, but as a human sense, we wanted to finish people's kitchens and bathrooms.
It was a reputation on the line, too, and a commitment made.
But there's been two parts of that. The public has adjusted to higher pricing, and then at the same time is the material pricing has come down. Yeah. So we're still at a higher price, but I think it's more palatable for people. Yeah. And I think everybody, and everybody has. I don't know how people are doing it because the wages haven't gone up, but everybody realizes it's just a higher cost of living now.
It was there's no doubt that with COVID shutting everything down, demand more or less stayed the same right away. Right. But with all these factories and all these other locations shutting down, the supply chain is what changed. Mm-hmm. Supply is what moved, and that pushed the prices up on everything. And then all of a sudden, you talk about all the stimulus that happened. Now all of a sudden demand's even higher. People were home and they were still spending money. Yeah. They still are spending money, to your point. So all of a sudden the prices went even higher again. And I know things have leveled out here, but I could only imagine from the building side of things that it was a very interesting period of time. And I know that a lot of people were calling you at the same time too because they had the cash. I know you guys were staying busy with all those projects you guys got. So
this last couple of weeks too has just been crazy.
Really?
The people calling. I mean, it's just people are they want to they're in their homes if they've finally gotten the decision that they can work remotely. Yeah. They're they're staying. It's interesting. I mean, that's kind of part of this podcast has been is like just talking about housing and like we're in a deficit. People need home. Everything is and so it's going to be interesting. It's aging. The industry's aging out. Yep. So the average person in the industry is in their 60s.
We have that problem too.
Right.
Yep.
Right. So is that you find obviously that's part people towards the end of their life really think about the end thing. But how do you is it are you finding it challenging to get because the younger generation's kind of strapped? Like, are you able to kind of talk them in because it's super important? It's the compounding effect. But
it's huge. There's no doubt the younger generations have a bit of a different mindset. Yeah. Forget the work situation. People have differing opinions about work ethic of this upcoming generation here in the workforce and how late they're kind of getting into the game, if you will. Yeah. Most of them are looking for opportunities. And I think a lot of them, because of the way the mainstream media kind of operates now and how social is kind of operated, it's become kind of, for lack of a better term, what's sexy to get into right now than what we kind of preach, which is a little bit more tried and true for a lot of our older clients. I'm not rushing to do Bitcoin for someone who's in their 70s type of thing. You know what I mean?
Well, it's had some nasty swings lately.
Yeah. So it's one of those things that we're trying to be cognizant of it all, trying to understand how our business is going to have to adapt over the next several years. Whether it's technology or approach, whatever that might be. Right. But as long as you're open to it, it's usually pretty good. But it is a different generation that's coming up, and it's an adaptation that's going to have to happen.
Yeah. Well, let's leave it at that. Listen, give John a call. It's been a great relationship and very I love how you educate, and so just chatting with you by the end of the conversation, you'll understand what John does, but I appreciate you come on, and until next time, I have to have you come back on and really kind of dive into the business sides of things.
Would love to.
And to understand that, and taxes. I'll leave it at that. Like, and people don't realize taxes is your biggest expense.
And it's the one you want to mitigate as much as you possibly can.
And that's what the tools that you have to offer are really. I can expense everything, buy new trucks. all of this stuff, but they depreciate in the parking lot.
Yep.
You have the ability with tools to get, takes that tax liability off
Right.
into products that actually grow
Correct.
with appreciation.
Reduce tax liability, give you opportunity to expand,
Yeah.
help with labor retention, help
Right.
offer additional benefits, those types of things. So yeah, a future conversation might be great with, you, me, and accountant or something
Yeah.
like that would be really
Yeah.
cool.
Love it.